When I look at the number of wallet addresses, active wallet addresses in Ethereum, and match them when Bitcoin was at the same phase, the actual speed of accumulation of wallet addresses in Ethereum is twice as fast. The point being is, I think there's a chance that Ethereum can have a larger market cap than Bitcoin. And that doesn't make it a better currency or a better investment. It's because by the nature of a platform versus an asset. Basically, anything is up for grabs. Anything can happen right now. And this is fascinating. There's a once in a lifetime, not even a lifetime, a once in a century opportunity to change the construct of the system. Now, could I be wrong? Of course. But this looked to me like the best single macro opportunity I'd seen in my entire life. And, I've seen a few good ones. I had a great one with the bond trade, last year and early into this year and stuff like that. But this is better than that. This is a once in a lifetime bet. I'd started looking at the chart of Ethereum and thought, this is a really great chart. So I started writing about it, and particularly the ETH Bitcoin cross. So I started writing about it a bit. And hilarious. I write about it in Global Macro Investor, and they're all kind of institutional guys, hedge fund guys. They're all like, oh, that's fascinating. Put it on Twitter. I was like, how dare you? You're cheating on us. So I started doing the homework on it. And the argument was that John Pfeffer's article about why all coins go to zero except Bitcoin, I just thought, well, this is bullshit. So I went and disproved it and wrote an article about it. And, he built this model around some sort of quantity theory of money model. And it's like, it's never worked in the real world. So why is it going to work in crypto? And why suddenly do you say in that whole article, which is a great piece, to be honest, but one of the things was, well, obviously Bitcoin has network effects, but nothing else does. And therefore these are utility tokens that go to zero. I'm like, let me check on that. So I just plotted them out. And guess what? You put on the number of wallets and the price, and lo and behold, there's a nice regression. They're basically to do with network effects. And then I looked at Bitcoin and ETH, and they looked identical, except ETH was earlier. Then I started putting the price of ETH at 5 million wallets and Bitcoin at 5 million wallets. It was exactly the same price, and the price structure was the same. So then I started realizing, well, maybe stock to flow is actually just an extension of Metcalfe's law, and all of this is network effects. So I started then trying to understand more about Metcalfe's law, how it affected the mobile phone industry, the internet, and then stuff like Amazon, Facebook, Google, and all of that. And so that was the huge breakthrough for me, was figuring out all of this, and that ETH was actually gaining faster adoption than Bitcoin. When I look at the number of wallet addresses, active wallet addresses in Ethereum, and match them when Bitcoin was at the same phase, the actual speed of accumulation of wallet addresses in Ethereum is twice as fast. So it is getting network effects faster. The number of developers on the platform is miles more than the Bitcoin network. The number of applications is miles more. That doesn't mean Bitcoin is dead or there's anything else. It's serving a different purpose, and that's okay. And it will have some of the attributes of Ethereum, and that's okay. But the facts are the number of active addresses in Bitcoin is growing at 50% a year. That's huge. Ethereum is growing at 100% a year. And the entire space is growing at 113% a year. So Ethereum is basically doubling in its network effects versus Bitcoin, but arguably the network effects are more because of all of the other applications, the developers, and all the other parts of it. So yeah, this is a beast that is being unleashed, and the market's just starting to realize how powerful this is. And could Ethereum take some of the moneyness of Bitcoin, the store of value, as it pivots this 1559 token and the ETH 2.0 and the restricted supply and all of the other things, maybe the reduced gas prices? Well, yeah, I think you're going to see ETH outperform this whole cycle. ETH's growing at about 100% a year, and Bitcoin's growing about 50% a year. The entire digital asset space growing about 113% a year, which is twice the speed that the internet grew at. So this is the fastest adoption of any technology in all recorded history. And ETH is the front runner right now. Now, it doesn't mean it always will be, But right now, it's clearly winning network effects. And therefore, I think the network is undervalued. But it was really discovering Metcalfe's law and how it applied to networks that gave me an understanding of how big this really could be. And once you look at things that are network adoption models, you tend to find they don't mean revert like a commodity that tends to have, not enough supply, which is going on right now. Supply meets it, collapses, right? This can't happen in crypto just by definition, particularly in Bitcoin. And then when you look at it, all of these kind of events, they look like bubbles, but they're all part of an exponential trend. So once you put it in a logarithmic chart, it actually looks pretty normal. And that's how you have to get a head around it. And humans don't think in non-linear terms. It's really hard for us. So, we can't get our heads around this. But I started looking at those charts, figuring out how network effects apply to this, and then realized the only mean reversion is probably to something like the 3 or 5 year exponential moving average, and that's it. So it's just an exponential curve that keeps going, but flattens out over time as the network effects get more saturated. Let's assume I think it's got a 10% chance of becoming something much bigger, but the whole market is giving it a 0.5% chance. Well, that misalignment in risk reward is a huge opportunity. That's what we do in financial markets. We have to remain open. You can't trade financial markets and go, well, I'm only going to trade Apple. And every other company's a fraud. They're not as good because their phones aren't as good. I mean, that's ridiculous. What we look for is, okay, where is the secular trend change? What's the best vehicle to express that view in? Can I diversify that view? Can I add juice to that view? Can I create alpha around that view? So that's why I come at it, and I think all the macro guys, we just come at it differently. And I understand that some of the crypto community doesn't like that because it feels like we're kind of abusive of the space. But, much like I talked about with regulation, I get people upset when I say regulation's a good thing. Well, if you want to get rich, people are going to have to come into the space. And talking about cyber hornets, I'm sorry, it's not going to bring a single corporate treasurer or a single institutional asset allocator into this game. And if you want to get rich, you need those guys to come into the game. The point being is, I think there's a chance that Ethereum can have a larger market cap than Bitcoin. And that doesn't make it a better currency or a better investment. It's because by the nature of a platform versus an asset, gold is the purest form of money that we've had. And it's a $10 trillion asset. The currency markets trade $4 trillion a day. And they're not in any way the same shape or form, but it's a bigger platform because more people use it. So the currency market overall is worth more. So I just think of it in those terms. And again, it's a very macro way of looking at it, which is not interested in the fight between the technologies and what tribe believes in what and how many coins can you measure and what's the total supply. It's like, okay, there is a chance here that this does really well. But I don't have enough conviction to make that my large bet. My large bet is Bitcoin because I have full conviction. One thing I've learned is you need to think more about human behavior and incentives and why people are doing things. So why is it so tribal? It's actually a throwback to 2016 when there was a lot of these projects rising. Nobody knew who was going to win. Everyone put their money in them and you want your own to win, right? It's like going to the horse races and saying, and that war is still being fought, and it's a false narrative now. Because Bitcoin's dominance as what it is now established. It's clear, it's institutionalized, that's over. So does it matter about the rise of these other things? That they're not in competition with each other, but human behavior is driving that. And I think as a macro guy, it's actually to my advantage, because if you call it shitcoins, I want to know about it because I know there's opportunity because you're being dumb. And you're being dumb, not that you might be right, but you've got a closed mind.